All right, we can go live.
This is Market Week Live for December 20th, 2024. Information and support for traders and investors. Welcome, everybody. Those of you that have been invited in because you're a level 1 to 4 member, you can put your questions into the Q&A. We're going to get to that. A little shorter show today because we're not going to bring you our individual trades. We're just going to bring you our analysis in the Q&A. And of course, anything you put in the Q&A about the stock market, well, don't, because I'll be catching up on a lot of those things as we move forward. And I look at the stock market. I see there's a question there regarding HYG and SPX from Walter. Thanks for that. I actually have planned to bring that today already. So I have a chart prepared. So that was a good one for you to ask. So I'll be bringing that for sure. This is just the legal stuff that you need to look at, and that just says what we bring you is for entertainment and education, and you should always look at your own trading plan and discuss everything with your financial professional. Our host today, well, me, I've been at this for 50 years, as most of you know. Became a trader on the CBOE in May of 1974. Been a trader ever since. Became one of the first screen traders when I actually left the floor in 1984. Became a member of the CBOE. Not only that, but Chicago Mercantile Exchange, Chicago Board of Trade, and traded in countless pits on all of those floors. But then I had to adapt to trading off the floor because I was just kind of called that way. And then, of course, the rest of the trading world was kind of forced to do the same thing. Matt's been with me for a couple of decades, Arvi for maybe 15 years, Katie for a few years now, and is certainly an expert in cycle analysis and in option trading. You can learn more about us by going to AskSlim.com. About AskSlim, meet the team, and you will get a good idea about who we are and our histories. Anything that you have an issue regarding your membership or anything on the website, write to team at AskSlim.com. Anything on our content, information for education and analysis, first-time specials, upgrades, anything on the specials that we're going to show you today, write to Matt at AskSlim.com. What we're going to bring you today is our express round. That's our Q&A. So we're going to bring this a little earlier than we normally do. We're all here, level 1 to 4 members. You can put your questions in the Q&A. We're going to spend about 15 to 20 minutes on it, and we'll cover as much as we can. I'm sorry if we don't cover everything that you asked for, but we'll do the best we can. Again, that's regarding trade planning, chart analysis, trading issues. And we're going to be able to help you with that. Matt is going to bring you our review of AskSlim services that he does. This is really going to look at the Give the Gift special. These were Black Friday specials, Give the Gift specials. We're carrying them through the end of the year. So you will be able to get this amazing offer that Matt's going to show you. I'm going to bring you my market analysis, some of the evidence, probabilistic projections in price and in time. Remember that we're one of the few analyst groups out there that actually do that, where we add time to the analysis and project out based on the information that we have. If you're brand new, you can get acquainted. Go to the top of the AskSlim website, click on the free stuff, and subscribe to the SIR Lite. You'll be able to get information on the stock market every single day. And this is kind of the beginning of how you really get a feel for who we are. On YouTube, subscribe to the channel, click the notification bell, like this video, give it a thumbs up, and on X, follow at AskSlim. And again, any questions you have, write to Matt at AskSlim.com. All right, we're going to jump right into the Q&A. I know that our team has been reviewing the questions that are there. So I'm going to be covering a lot of your questions in the futures, commodities, and then the team will take it over, and we will then look at the equity side, ETF side. So I'll start this off. The first question that I have a question on gold, on silver, on the dollar. That all makes sense. Again, Walter asked about the stock market and HYG and that relationship. I'll be getting to that near the end of the show. I don't see anything else in the future side. So that's all I'm going to do. I'm going to look at those three symbols and then turn this over to the team. So let me go to my charts here. And that's the chart grid that we're going to look at for the stock market. So we'll come to this chart grid right over here, and we'll start out looking at the dollar. That's a good way to start because the dollar has been immensely strong. People, you might ask, why has the dollar been so strong? And you see, it's gotten up to the top of a resistance area there on the weekly chart. So on the left is the weekly, on the right is the daily, on the bottom are cycle brackets. Those are a drawing tool. They're simply a guide that helps us get an idea for the flow of funds, the money flowing in, the money flowing out in a rhythmic fashion. So sometimes you'll see multiple charts, multiple brackets that you see on the bottom here. Sometimes you'll see a light gray one, which means we've had an older one in there, but something else has taken more dominance. We're always looking at where the energies are to get a better feel. Our analysis is flexible. If there's a bunch of you out there that are brand new and don't understand flexible analysis because you look at analysts that say the same thing over and over and over again and do not respond to the new data that comes in the market, well, you won't be used to what we do because we always respond to what we see. And we look through this stuff all of the time, every single day, and make sure that what we have is the highest probability. We have probabilistic analysis, and it comes from the cycle information, the support, resistance, momentum conditions, all of these things that we add in. The whole team does this, and that's what's important to look at. So you see in here, there was a very nice ebb and flow in the dollar. You saw right over there. This is interesting because this is a positive cycle. You see that. When it got up here and tested and then broke below that level, it was negative and said to us it would likely decline for this whole long period in here, which it did. You can see in here the reversal scout, well, it was turned bearish right here, turned down. That's our momentum indicator. We have a couple of them. I like to use this on the weekly chart. And here's where it turned up right over here. And once it turned up way back over here last September, it has since been pointing to the upside. And even this big down week over there didn't affect the strong upward push. Now, this area right over here, this red area, is essentially a resistance zone between a major fib and that's a 50% and a major 61.8. So that's what we have in there. And you can see that it got up in here and now is starting to reject. Of course, today is a very high volatility day in the markets. And this, I think, is what you're seeing as we saw a massive decline in the S&P 500 early on in all the stocks, and then a reversal huge to the upside. So that's what this is right over here on the dollar, is that tail that it left there up towards the top of that resistance. And now you can see in here that what we're looking for is some kind of a corrective top in here and then a pullback. So this is the 23.6%. That's at around 106.5. This area here is the 38.2. That's at about 105.30. So we're looking for this to be a topping at some point here and then that pullback. But you see this would be a very positive configuration in there. And that would say that sometime after that low that it would make in there, we would expect that it would then be moving up again in this rising phase. That's how we use the timing in here on cycle analysis. And so this says corrective phase, a pullback sometime into right around February something or early March, and then trying to move up again. Do we have a top in here yet? Well, there's no way to know that. We get this reversal that you see right over here. Why is that bar green? The bar is green and solid because momentum is positive in here. The slim ribbon PO on the bottom. This is a level 4 indicator that's phenomenal. And what it does on these up arrows is show you that the momentum is likely to return to the upside as it did all through here. This is the slim ribbon. This is a free indicator. You want to learn about how to get it on what platforms, write to team@AskSlim.com. Here's that reversal there. Again, that's when you get that kind of an engulfing pattern, it really makes you think about that a top might be forming. We'll need a little more information in here, and certainly this will have to turn into negative momentum before we're convinced that there's any kind of a top in there. So that's kind of the look in the dollar. It's got a toppy feel to it right now. I'm not 100% convinced because the dollar is strong, because interest rates are strong. Money is moving from other countries into the US dollar, where it can get a higher interest rate in our treasuries. There's a big disparity between a lot of the countries and the United States as far as interest rates go. That's why the money is flowing in. Also, because they believe that Donald Trump's tariffs are inflationary. Inflationary means interest rates will stay high. So they want to stay in the dollar or be in the dollar for that reason. That's why we've had this move. But at some point it tops, and there's your first indication looking at that right now. Now, regarding the gold and silver market, which I'm going to look at and then turn this over to the team. I gave a warning a couple weeks ago saying that I did not like the way gold and silver were looking, and I threw up the caution flag on them, and that was really the right thing to do. So we'll take a look at gold first, /GC, again on the bottom of the cycle brackets. These have interesting harmonic families looking at that. I'm going to blow this up for you to see. Look at the harmonics that are in here are phenomenally good. As you see, the big dominant cycle right in there, and made up of 3 minor cycles that you can see very clearly in there, 1 and 2 and 3. And then one kind of big long one that you see right there, but not too bad. It's not that far off of this. Those 2 lines are really where the expected trough would be, and then moving up again. Momentum is still strong, but it is trying to roll over right there, and that might happen. So again, we're in the second of these minor cycles. It would need to get close to these lows down over here, 2540-ish, to really give us a signal, though the daily chart will give us a better signal. We were projecting up in here to 2750 to 2800 right there, with an outside chance up at these levels. It still could happen, but with the way I'm going to show you the daily chart, I don't think so. It's failed here at the 78.6%, and now really kind of stuck in that range right there on the weekly chart. Now, here is the warning right there. When you get a cycle that has positive, as this one right in here, it says that the next cycle has a high probability, somewhere around 70%, of taking out that high. That would have been 28.26. When it failed in here and then tried again, stayed under this 78.6%, and then came down to this lower 78.6% through that support, that was a warning. And what that tells me is that this big cycle has turned down. If that's the case, the rallies in this area are going to fail and come down again and into this time frame right over here, which is around mid-January. So any rallies that occur in here are likely to come down into mid-January. If that's the case, going back to the weekly chart right over here, that says to me that any rallies in here are likely going to come down into mid-January. Well, if they do that, well, then this cycle over here is going to be taking a hold on the weekly chart and pushing out again into mid-February or March. So that says to me there's trouble here in the metals markets. I believe that these rallies in here that we may see on these bouncing days are high probability sells based on what I see there. The last one I'm going to look at is silver /SI. Here's the silver market, and this one is even worse because the silver now got below this low on the weekly chart. The momentum in here has turned down right over there, which tells us that this cycle right over here has turned lower. This has a left-hand translation. What does that mean? Well, take our cycle analysis workshop and you will learn about that. But what it means basically is that this cycle here peaked on the left side. How do I know that? Well, it made the low over here on time, and then came over here and broke that low. If you look at the daily chart, you can see it oh so clearly when you look at this. Here's your cycle rhythms in here. Now, this is the gold cycle rhythm, and you can see it's really out of phase with the silver market. It has kind of its own mind when you look at this. And here was that key low right over here. And then you see that low, it was early. And I said, well, you're probably going to get a test coming. And that's exactly what it did. And then you got this rally up in here into resistance. Well, you would expect it to fail because this low got taken out right here. And that's what it did. Now, this points to a decline out into late January, early February, kind of in line with what we're seeing in gold. That makes anything in here a sell. Also, you can see the slim ribbon PO on the bottom, the slim ribbon right over here turning negative. So you have negative momentum in silver. Silver is much worse than what we're seeing in gold right now. But take that as a warning that these markets are not in good shape. And the dollar strength certainly is affecting it. But what's happening is also a flight to liquidity as money starts to move out of the things that have been super highly inflated. And I think that that's an important thing to consider. If you were thinking about investing in the gold and silver market or buying, I believe the risk rewards are saying that the best time to do that may be in February or March rather than doing that right now based on what I see. And I'll talk about this more in the big picture analysis that's coming up in just about 8 or 9 days. So that's the stuff that I'm going to show here, and I'm going to turn this over to the team. Who's taking
Okay,
it?
I'm going to take
All
it. Let
right,
me
Katie.
share my
Good.
screen. And let me know if you can see Tesla.
We can.
Okay, great. So this one is frequently requested, and we had a huge move up to the 200% extension level after the election here. These are rising support zones. Notice that we do have a minor cycle trough that is due in the February timeframe. Maybe it'll come with earnings, maybe not. We'll have to wait and see. We do have some further levels up here if we get a move down a little bit into this minor cycle trough and then it wants to try to move up again, we have a 261.8% extension up around 555. Right now, momentum is very strong, bullish. We do have a disparity index down here, which shows how far we are from the 34-week moving average. And you can see that it's just about as high as it's ever been. Often that signals a reversal, but there's no way to tell when that may come. You can see those moving averages there. Over on the daily chart, here we have a 30-bar cycle. We have the ghosted cycle that's still exerting some dominance. You can see it's coming down into that time period there. And so we would expect another attempt up to these levels here in between about 475 and 520-ish, with the daily cycle timing window coming out between January 10th and January 21st. Here is the slim ribbon PO getting a momentum continuation signal over there. We do have a neutral signal here on the OBI. That's interesting. And of course, the MCI is showing very strong. So right now, this is still looking good, and I would expect it to try to get another bounce before declining into this time frame right here. Let us do Nvidia. Someone asked for that one. Nvidia, we have the downturn in momentum already, and we're into the support zone here. Our timing window isn't due until March 10th through April 18th. So we have a projection here anywhere from the bottom of this support zone at about 120 down to 112 would be the 78.6% fib. If it wants to be even weaker than that, we'll get all the way back down to the cycle low support at 100. Over on the daily chart, you can see this broke below the cycle low support there, and it got into this target zone between the 78.6% extension and the 100. I put in a resistance zone. It's actually getting up into that zone now. The timing window is 12/26 to January 6th. So if this were to get another move to the downside, we'll get a momentum continuation to the downside signal on the slim ribbon PO, and that might set up a good shorting opportunity just for a very near-term trade. Momentum in here is negative. Let's see, let's go to Chevron. These three are all on our focus list. All right, I'm going to zoom in. We've got dominant 39 bar cycles that are broken into minor thirds. You can see that we're coming into this time period of this first trough, and it did get down just below the 78.6% fib of this move with negative momentum there. So what we're looking for is for this to form that low and then for it to try to move back up. Because of the depth of this retracement, I am not projecting a higher high. It might try to get into this area right here again before we move down again. Over on the daily chart, you can see we are just slightly late. If this is the low, it's going to have to do better than that for me to be convinced that that is the daily cycle low, but we are just a day past that timing window. And this is a declining resistance zone if it gets lower than that, but this is the area that we would expect it to be able to get up into in this time period through January. Let us go to some of the requests from our level 4 members. COPA, this is a symbol that's in the industrial space, and we do have a minor cycle trough that is due, mid-January, early February, and so we are getting that retracement right now, having reached the 100% extension. Momentum is still positive. Over on the daily chart, we are inside this daily cycle timing window right now. If it wants to get down below where it is already, the next level down is the $57.11. That's the 78.6% fib. We do have a negative reversal scout, and our slim ribbon has turned neutral. So this is a declining resistance zone. We'd look for a bounce up into this area, and then this could be either this could be that cycle trough, the minor cycle trough from the weekly right here, or it could be this, the end of this cycle. So we'll have to see if it can be stronger and move up into the rising phase of the second minor cycle on the weekly, or if this will fail and give us that minor cycle trough out here. These are both in sync cycles. Next, I've got a couple of ETFs. Let's look at, oh no, I want to do Coke first. Coke. Here is the weekly chart of Coca-Cola. You can see we formed our weekly cycle low right here several weeks ago, but this is really just not able to get any traction. Our reversal scout is trying to turn up, but it has not been able to so far. We're just getting this kind of sideways move. So because of that, I have not made much of a projection to get up higher than the bottom of this resistance zone, which is 67.46 to 66.03. We'll see if it can even get up there. And here's what that looks like on the daily chart. There's that intermediate cycle low and synced daily cycle low, and now just moving sideways. Daily cycle timing window coming up between 12.26 and 1.7. Our 78.6% fib is 62.18. I would expect this just to continue its sideways chop. Momentum is negative. All right, now we're going to move into just a couple of ETFs. Most of them are retail. VanEck Retail Sector ETF, you can see that we have a timing window coming out again. That's 3/31 to May 9th. So if this is going to continue its decline, we have quite a while to go. Right now on this time frame, there has not been any technical damage. We are just about mid-cycle. This is 37 bar cycles, so difficult to put in the minor halves, but maybe we get another attempt up to these levels and then down. We have a projection in that time frame, 223.12 down to 217.82 is the top of the support zone. If it's weaker than that, then down to 212.5. Over on the daily chart, we are approaching a cycle timing window, 12.26 again. This is coming up quite frequently this time period to beginning of January, 1.7. We've already, this is our cycle, this is our candle today, very flat. Not a lot of volume on that. our next level down is 224.15. If it gets down there, then we would expect that it won't be able to take out this cycle high, but instead move up and then back down again and just continue to make a cycle, lower lows and lower highs all the way into that weekly cycle timing window. So we have negative momentum with the reversal scout, and the slim ribbon right now is neutral. Another ETF related to retail is this one. It has to do with online retail, and we are about mid-cycle on this one as well. We are projecting into a timing window in that March to May timeframe, and we've got levels from 44 on the top to about 41 on the bottom there. On the daily chart, you can see we've gotten a bounce off of this 78.6% fib today. So maybe we get back up into here, and then I would take a look at this for an opportunity to short, or we would want to see this resistance zone hold. We've got a negative reversal scout, and this one too has a neutral slim ribbon. And the last one that I'm going to do is, excuse me, FDN. This is an internet index fund off the Dow Jones. We have a timing window coming up January 27th to March 7th. So far, this is showing positive momentum. I put in a very shallow retracement possibility, 238.83, and then the top of the support zone would be 227.05. This could easily get higher. We haven't had any damage done here. We'll see how that turns out on the daily chart. Right now, we're coming into a timing window. We may have our cycle low here slightly early, or maybe one more dip. And then this cycle, it's interesting, this cycle over here troughs February 3rd, which is inside this weekly cycle timing window. So we would expect this cycle to show some weakness or a breakdown. So I've just projected back up to 257.87, and that would imply that this is already the peak, but it could get a little bit higher and then come down. And those are my symbols.
All right, great job, Katie. Thank you very much. Let's go ahead and hop over to my screen. Just look at a couple symbols, and we'll hand this right back off to you, Slim. So you should see a chart of Boeing. We're going to look at the both weekly and daily cycle analysis for Boeing. We'll pop over to the weekly. So on the intermediate term, you can see that we did just form that low, and we are already at the 78.6 at around 184. This old high is actually in play here at 197, so acting really well. Hop over to the short term. We're looking for a move at least around 184-ish, and then look for a higher low to form here. And then for this to curl back up, there is a trough due somewhere around the middle of January. We'll hop over now to PDD, Pin Duo Duo. Overall in a bearish mode, a trough that is due out in the, let's just say April to May time period. So very negative. I would say, very high odds of a look back at the 88 level and lower. And the base of this zone is around 78. So somewhere around there. Hop over to the short term. You can see that there actually was a low that was due here. It has since failed. So we are actually watching now for a move through 95.86. And then you can see that there's a trough that is due somewhere around mid February-ish time period here. It says around 216. This is a 54 bar dominant cycle, so somewhere around the middle part of February. And that's all we have, Slim, and I'm going to go ahead and hand this off to you.
Wow, that's it. Great job. Great job. Just love seeing all of you apply the work that we have spent so much time as a team creating a method that we've been creating. So just absolutely love that. All right, so I'm going to get back in here, and then I'm going to turn this over to Matt in just a moment. I just want to answer a couple questions that I see in here from Ron. Ron is asking, how does yesterday's massive sell-off and then today's big bounce affect your cycle analysis for the next 2 months? Sooner or later, the bubble is going to burst. This can't go on forever. I hear so much cynicism in your questions, as you also say that Trump, Musk, and Congress are chaos kings. And even if the continuing resolution is passed, how can cycles ever be used? or any indicator for that matter. It seems that it's just crazy every single day. So the first thing I want to do, I don't really comment on political stuff on here. It just gets me in a lot of trouble. But I want to tell you that if what was going on right now by Trump and Musk and his team, it wouldn't happen now, the markets would just punish everybody later. Somebody had to look at this finally, and this big bubble that's being blown up, do something about it because of the massive government debt and spending. And so now they're looking at that, and the Fed, who has been pumping it up, now has kind of said they're maybe done with that for now. And so the market is responding. And when I show you the cycle analysis coming up in a few moments, I think you're going to see that everything is very much in line with what we look at, and especially looking at the indicators that we have that help us stay on the right side of the market. So yes, I think that you can use indicators. I think cycle analysis is a fantastic way to look at analysis. And I hear your cynicism, and I hope you get past that so that you can get to the place where you're thinking about things in a positive way. So that's what I wanted to comment on that. And now I'm going to hand this over to Matt as we're going to look at our special this week for the next week or a little bit more, which is just fantastic. And a lot of people taking advantage of this already. So Matt, I'll turn this over to you.
All right, excellent. Great job, team. Just going to share my screen here. Just give me 1 second. Okay, we should have our homepage up on the screen. As Slim mentioned, I'm going to review very quickly, high level, our services here at AskSlim. So we have several premium membership options, and we provide technical analysis services, innovative trade planning tools, and comprehensive education. And we do that for various trading styles, including a separate membership for day traders. So if you go to the Become a Member section of our site, you can see that we have those several membership levels. And what happens is as you go higher in a membership level, you have more broader and extensive coverage in terms of the technical analysis that we provide in terms of markets, stocks, ETFs, futures. And then also as you get into levels 3 and 4 is when you get additional access to our raw charts, our chart grids, proprietary indicators, and then also our trade planning tools. And you get a regular stream of information and content around how we apply our methodology to creating trade planning, the trade planning process. So that's what it's like when you become an AskSlim member. There is a direct connection to the analyst team through Discord as well. So this is a very transparent way to see how professional technical analysts go about their work. We are very thorough in that, and you get to see the application of that work, as Slim mentioned, time and time again from all the analysts here. Okay, but we do have very special offers going on right now. These are our holiday specials. These are the best deals of the year. That's not just something that we say lightly. This is the time of year to take full advantage if you have an interest in AskSlim, because you can not only get a discount of, as it says here, over 35%. So there's level 2, level 3, level 4. We just talked about our higher levels give you more access to coverage. And then as you get into 3 and 4, you get access to our trade planning tools and then also our proprietary indicators and grids. So you get 35% off of these levels. And then also there are Amazon gift cards included. So with the level 2 membership, you would have 35% off. It's normally $59 a month. It comes out to about $38.25 plus a $20 Amazon gift card. And then with the level 3, typically our regular rate is $119 per month. And with the special, it's $77.33. So it's a 3-month. These are non-recurring, so it's not going to automatically renew. You can give this as a gift to yourself or someone else who you know has an interest in technical analysis or trade, wants to hone in on enhancing their trade planning process, or maybe doesn't even have one and wants to learn how to develop that. So that's what we'll bring to the table for them. With level 3, you'll get the $50 Amazon gift card. And then with level 4, which is our top tier membership level, you will save 35%. Normally that's 159. It goes to 101 and a quarter plus $100 Amazon gift card. So that's the three options that are available. And then we did something last week. Slim announced that we have a special bonus that's coming with the level 4 membership, and that is particular to the Thinkorswim platform. Now, this is I can't even stress how important or fundamental this is to the development of a methodology, and then not only that, but being able to put that into trade planning. What we have here as part of this bundle is a set of the analyst team's favorite grids. So these are pre-established chart grids, and I'm going to show a handful of them that we have put together over the years with our favorite indicators in our best time frames that allow you to do your trade planning more efficiently and effectively. I can't stress enough how important it is to trade plan, but even before you can trade plan, you have to have a methodology. You have to have a decision-making process that you go through. And that's what we bring to the table with AskSlim, is this curated methodology. As Slim mentioned, he started 50 years ago as a trader on the floor. Our methodology has evolved and has come now to bringing in cycle analysis, momentum analysis, and Fibonacci swing high, swing low analysis. So you really get a well-rounded method. And with these grids, you're going to get to see that in action. So the key benefits are technical insights across multiple timeframes, and you'll see that in the grids when I pull them up here in just a second. Momentum analysis, you get a sense of extreme levels and warnings. Do we have a potential reversal coming into play? So we have indicators that can help with that. And then with strategic planning in terms of entry timing and position sizing, that's how we set up our technical grids to help answer these key trade planning questions. So I'm going to jump off of here. We're going to pull up some of these. I'm going to show 4 grids today. We have a total of 10 that come with this bundle. And this one here is our standard, we call it our chart streams grid. So there, you should see 4 time frames on this grid here from left to right, and I have Bitcoin up here. We have our weekly chart with our weekly momentum indicator on here, and you can see this was back in September that the weekly indicator turned up, right? So that would be the longest duration on this setup. So this setup is really for your near-term and short-term trader. Near-term is next, let's say 1 to 7 days, something less than 10 days, calendar days. It's not intraday. This is great for your near-term and short-term trader. Short-term is the next 1 to 3 weeks. And what you do is, when we have playbooks, we call them playbooks, and we do live sessions. I do live trade planning sessions. RV hosts and office hours. Katie does options trading. And we go through this process. We use these grids. So that's the really cool thing, is that you're going to get the actual grids that we use to do our analysis and our trade planning that we share with our members. And you'll be able to open up these live on your own Thinkorswim platform. So as you can see here with Bitcoin, so I'm going to stay in the 2-hour chart, because when you're a near-term trader, we like to look at the 2-hour chart as our guide when it comes to directional bias, with the focus on the slim ribbon, which is right here with our color codes, the candles, and then also the reversal scout. So in terms of looking for potential peaks, now there are absolutely no certainties. All there are odds, and we've done our due diligence to try to come up with methods and grids and indicators that help put the odds in our favor when we want to put together these trade setups for ourselves. And you can see here the reversal scout turned negative here. That one goes purple, and this was on 12/17. So in terms of being able to identify changing momentum, potential reversals, you can also see here with our SMI indicator that there was a divergence that took place. It's a pretty significant divergence, and you can see it multiple times as it made these 3 peaks here, that the momentum indicator started to weaken, and then we had that reversal that took place. So you got to put all this together. This isn't necessarily the first time through you're going to get it all, but the markets are complex, and we have created educational resources to deal with that, and we have a team here that can support you through it. And you can see all through this rally, though, that our indicators stayed positive in terms of suggesting that the directional bias should be on the long side if you're a short-term trader, as the slim ribbon along with the reversal scout were positive all the way through here. Our slim ribbon PO, which is measuring conditions for momentum continuation, as there was these little pullbacks. The slim ribbon stays positive, and then our projection oscillator, which has been integrated into the slim ribbon, starts to measure how deep of the magnitude of the sell-off is, and then you can see that there's a continuation signal that fires. And this wasn't when we had the breakout, it was the day before the breakout, and really that led to a significant move. Then we had another little pullback, slim ribbon stays positive, the slim ribbon PO fires another continuation, and we had another rally, and then you can start to see that momentum weakening, and then we have that reversal. Now we have our first indication of a reversal, even on the daily reversal scout. We'll see if that holds through the end of today. The last one came in October. So you have this multiple time frame setup, get a sense of momentum, momentum confirmation, momentum divergence. Most importantly, though, is directional bias. I would say that we do this better than anyone, is we help you get structured so that you can determine what that directional bias is, or have a high confidence around that, and get yourself set into the right, let's call it, where's your home base? Are you an intraday trader? Are you a near-term, short-term, longer-term trader? We really can help you hone in on that, because that is extremely important as you look to set yourself up for your trade planning. All right. That was the bulk of what I wanted to discuss. Now I'm just going to quickly show you a couple other grids here that you're going to benefit from. So in terms of longer term opportunity, we know not everyone's a short-term trader. So we've built a really cool grid. Slim put this one together. We have on the left here, I have a monthly chart, and then on the right, I have a weekly chart, and I have multiple indicators happening. But you can see here that there was a cross. So this will be your longest duration indicator to really set the frame for what is the overall directional bias. So in August, there was a cross here that suggested there was a meaningful shift in these two moving averages that we use to look at the momentum condition. And then you can use the shorter duration, which is weekly. So this is still set for that longer duration investor or position trader. And you can see here on the slim ribbon as well, there's that confirmation that we went from a negative condition and then into a positive. And then I added another one that Slim set up on the bottom here for something that was a little bit more sensitive. So this is the reversal scout on the weekly, and you can see that it's going to be more sensitive than the slim ribbon here, but it's really what's the important focus is when we have alignment in all of them. That will let you know that there's a high probability of a strong impulse wave going to happen as you have momentum conditions on these three time frames and three indicators coming together. So that's where that next huge move came, and this was pre this huge move. I'm not showing you something after the fact. These indicators were showing that Tesla was in a longer term perspective very bullishly conditioned between these two less sensitive, and then you had that turn right about here in September where the reversal scout really took off as well. So we have that grid for longer term traders or investors who are active. And then the last one is our heat map. This is an indicator bias heat map. I keep talking about how important it is to have a sense of your directional bias. And we have three different ways you can tune this one. So this one is tuned with a sensitivity for near-term trader, because I have the reversal scout and the slim ribbon here tuned for the 2-hour chart. So that's what drives our near-term trader. And then we have a formula that we share that allows you to turn this into a short-term duration, and then even for intermediate time frame. So all of this is available as part of the bundle. We have a whole educational resource section for it. Plus, I'll be going live on, I believe it is December 30th. I will go live and I will showcase this, and you can ask questions. I'll go in real time and show how I would trade plan through this. And be a great way for you to really, if you have questions, more questions, to take full advantage of that. But what you can do here is you can sort. So this isn't just about looking at a sort of a really cool looking map, which it is, but you can sort this, and what you're looking for are alignments across the board. So we have a reversal scout, our ribbon, our MCI, and our OBI. And the MCI has a numeric value to it, and so does the OBI, but this one ranges from -100 to +100. So as you're looking for alignments to find opportunities where you have a matching momentum or bullish or bearish conditions, this is a great tool to do that. So if I just sorted here on the MCI, you can see that there's a lot of red that's come into the picture, but let's see if there's anything, positive. So natural gas UNG ETF has a combination of positive conditions. Boeing, Slim or Arby showed that one, and then also the dollar here. So those are just some examples, and you can see other ones that have either started to turn more negative, but this is a great way to track it and see this heat map picture of directional bias all at the same time. All right, I know there was a lot there, but I thought it was really important to share how the wealth of information. There really isn't a numeric value I can even put on what you would get with that level 4 package because of the amount of time, probably tens of thousands of hours that it's gone into the methodology, as well as building out these indicators and grids. All right, Slim, back to you.
All right, great work. That gift to gift is just an amazing offer. And I think that we're going to get a lot of people as we come towards the end of the year to sign up for that. So that's absolutely great. Now we're going to move forward. Now I'm going to show a little bit more as we get into the stock market analysis on this indicator bias heat map. Matt had his tuned to a shorter term to a intraday, actually using the near term information 2 hour. I'm going to be tuned more to a swing trader time frame as we look at that, and I'll look at actually the futures markets and some other things. We have some great stuff coming up here in the show. Now we'll move forward. Stock market analysis and projections. First, the important information. Make sure you read this slide. This tells you about our approach to analysis in the markets and about you using our information and the important aspect of trade ownership. You have to own your own trade. Don't make trades based on what we say. Make trades based on you using all of the information you have and making your own decisions. All right, we'll take a quick brief here on the markets. This has been an extremely volatile week, and the stock market until like 10 this morning had really what was the worst week in a couple of years. And there's been a time period in here where we've seen a real deterioration in the second, third tier of the market, a lot of negative breath. For a couple of weeks, the Dow going down I think it was 11 days in a row or 12 days in a row. So it was a big declining period in here. And of course, today we get a big reversal. The big decline that we saw basically was in 2 hours. That was after the Fed on Wednesday came out and what really matched the expectations, the things that I told our members was that I thought the Fed wanted to get to a 1% decline in interest rates, which they now did, 50 basis points and then 25 and 25, and then probably would stop and want to take a look at things. And that's basically what they said. They took a few rate cuts out of 2025, and that disturbed the market also. And they're just indicating that they need to look at both sides of their mandate. And that was exactly what Powell said. And they're far less restrictive now than they were. I would even challenge whether they're restrictive at all. But some people would say that, a more normal rate is around 3.5%. Maybe they want to get there at some time, but it's not going to get there until the stock market has some extended period of decline when they start to get nervous, or we get into what they really see is a recession with climbing unemployment situation. So that's what really got the market to start moving down. And of course, it was from insanely overpriced conditions. And it was just ready to have a move to the downside. And basically, I warned also a couple of weeks ago that even though this was favorable seasonality, I thought there was downside risk, and that was because there was so much massive gains in the mega caps that I thought people, being that you had 10 stocks that led this big upside gain, and then the other 490 stocks really languishing. I think at one point there was only about 18 of them that were above their 50-week moving average. I know I put something out on that recently. So we had a big deterioration. That meant there were a lot of losing stocks out there. And it also meant that these big gains, they would nail some of those down in these mega caps and sell something else against it that they had losses on. And that would then bring the market to the downside. And I think that's what happened. Today, we got pretty good indication that the inflation is not that bad. The PCE came out and it was a little better than expected. And then we had this big problem with the debt ceiling and this bill that didn't pass and blew up. And now they're talking about passing something a lot more simpler so that we don't have a government shutdown. But as I said earlier in the show, I think we need to look at things very hard regarding all of this huge government spending. And I'm glad that they're looking at it. And if it shakes things up, so be it, because the markets would do that all on their own if the government didn't come in and make some changes. So the decline in here that we've seen did some damage in these markets. And I'm going to show you that in the S&P 500. And especially even in crypto, which I'm not planning on showing right now, but there were some big breakdowns in there in the short-term patterns. So I think crypto also has some problems moving forward. The selling pre-market that we saw today, well, that reversed quickly, as I said, and that went from down about 60 something points in the S&Ps to up 110. So we had like 170 point reversal in the S&Ps, and that comes at a time when we were kind of expecting the market to stop moving to the downside, and you'll see that as I begin to share this analysis. However, we had expected that the stock market would move to another bull market peak in January. There are messages out there right now that are saying that's probably not going to happen. And that the rally that we get into January, which I think may have started today, though I wouldn't be surprised if it gave a lot of these gains up before it started to look a little better. I think that rally is going to fall short of the high we've already seen. And that means that when we start to move up in January, and I'll show you what that timing is, that's probably a time to be selling, because I don't think that we're going to see higher highs. Maybe not even till the second half, but I will share that with you in the big picture analysis that I do in just about a week or a little bit more. Stocks for the week, well, they were down well over 3%. Now they're down less than 2% right now. Bond market 30s lose about 1.5 as we see the 10-year yields move up about 11 basis points to 4.5%. They were higher, of course. Gold market down about $18 and the silver market down $1. Silver and gold, as I showed earlier in the show, really don't look good to me. So silver actually looks weaker and has a significant breakdown. Dollar super strong, but may actually be getting ready to peak as it gains about 1% on the week. And oil loses about $1.70. But based on the analysis that we've been showing, where we expected the low to come in the low 60s to mid 60s, it got down to about 66. Now the time is kind of ending on that, and it's starting to look a little better. So oil actually could be better. Let's look into the stock market right now. We'll look at multiple time frame analysis and projections. S&P 500, NASDAQ, Russell, weekly and daily. We'll look really quickly at those. We'll look at our heat map that Matt has already given you some peek at. And some really good stuff that we're going to take a look at here. So let's take a look. We will start out by looking at SPY. I set this up, SPY up first, because I actually wanted to show you this 2-hour chart that I think is pretty significant. Again, we have weekly, daily momentum right there. That's that area chart that you see, and a 2-hour chart here with all of the momentum overlaid on it. So you really get an idea of what the conditions are there. Let's take a look at this SPY. So we looked at the potential for a bigger decline here that didn't happen. This one at 6% right there is what made the Russell low. And then Russell got stronger, but then it got a lot weaker during that period. This is where that S&P low timing came right over there. And you can see in here, these rhythms in here look really pretty good. And then we got into this next rally. But you can see in here, looking at the reversal scout, momentum has stayed very strong looking at that. On the bottom in here is the disparity index. This grid that we're looking at right over here is Katie's favorite, so I'm using it right now. Mine looks a little different on the weekly chart. Doesn't have the disparity index, but I put that on there because Katie really likes it. So that's what she looks at. This is still, you know, a bullish look when you look at that. Now, what happened is when I look at the daily chart right over here, this low right over there, which is this shifted low, DJV, you asked me a question about this, and this is the old timing right in here. But I really think that based on what's going on at the end of the year, you often get some shifting that's going on, that important low is right here. What gives me that idea? Well, this timing right in here and this reversal nails this timing right there. And that says to me, that's probably what has gone on. Now, this cycle right over here, I actually want to show you all of these, because what you see in here as we're been moving up during this time period right over here, positive cycle, you can see positive cycle. What makes it positive? Well, it ended above where it started, made a higher peak, came down and ended above, made a higher peak, came down and ended above, made a higher peak, and now a lower low right over here. If this was the end of a major weekly cycle, I would say that makes sense. But we're in the middle of a cycle right there on the weekly. So that says to me that there is a high probability of a failure in here. Now, we have this massive swing in here where the S&P 500 moves up 170 points from its lows, or 17 points here on the SPY. Let's take a closer look in here. And there's that big reversal. I think based on this negative pattern in here, based on the fact that the slim ribbon PO, the slim ribbon gave up and is no longer positive momentum, that this is a failure area. Now, yes, it could continue up, and I think that it probably will. Probably get some pullback or chop around in here and then try to get up in here again. So this resistance is basically where it is right now, 595 at that 50% retracement. 61.8 is at 598.30. That would be a likely level for it to try to get up to in here into January. This is the 78.6 right there. If it got above 603, I'd start to think the market was okay. But I have a lot of doubts about that based on this failure and these patterns. And I believe that this area right in here between 595 and 598.30 in the SPY is the failure zone. And you can see we have it marked as a sell zone. It's a sell zone because it's resistance and because this is negative right over here. It will really give me a lot of confidence if this starts to chop around down over here and we start to see momentum go negative. Here's the momentum right in here, and you could see it is neutral. We're looking at the OBI right over here, which is still neutral right there. And we will look here at the 2 hour. Now, what did I do on the 2 hour here? I overlaid the weekly momentum up on the top, which is still positive. I overlaid the daily momentum over here, which went negative, but then neutralized. That says to me that when it goes negative and neutral, it's pretty certain that this daily cycle that I overlaid on here, that says to me that that's probably the bottom right there. And even though I'm expecting pullbacks and for it to chop around, I really don't expect it to get under that level here until sometime in the next cycle that's out over here after we get a failure. But you could see momentum turn negative over here on the 2 hour. And this is a good look at how I can overlay all of the information in here and get a great sense for market condition. If you look here on the market condition indicator, it did finally start to turn down over here, but is a long way from giving us any kind of a signal, and that will take some time to do that. Let's take a look really quickly as I switch over to the NASDAQ right here, and I'll be looking at the same thing really quickly. Right in here, the NASDAQ, let's blow this one up on the weekly. You can see the same type of a pattern right over there. And as it still looks positive and momentum is still strong on the NASDAQ, Here you can see a different pattern. Now, what I put in here on the NASDAQ is our cloud formation as it begins to form, and it hit the support perfectly and began to move up. This has a better chance of moving to a new high in January, but again, we're seeing weakness starting to come in these mega caps. So we'll be looking for whether or not it can get up and equal that high. Now that I have an anchor point in here, I can put in the resistance numbers, which I will do. So that is a look at the NASDAQ. Here is your NASDAQ momentum, as you could see, and that actually stayed strong and stayed positive. Option bias indicator staying positive here, and then another upward turn here on the slim ribbon PO. All of those more positive, as you could see, looking at the NASDAQ. Take a look at the Russell. The Russell is a different story. The Russell actually had this kind of a break underneath that support. So you can see where it got support on the NASDAQ. It didn't get support at that level, though it would need to get under 2144 for me to believe it has really turned negative here on the weekly. The problem is, now I want you notice I have this downturn right over here and projecting down over here out into March. Why did I do that? It's because this turned negative. You could see the cycle right in here, either this low or this low. It doesn't matter. We've come down to that level right over here. It's pretty well defined. And this anchor point here is going to give us a sell zone in here when I do the next update on the charts. This gave ground all the way down to that low over here, through this low here. And it says to me that the Russell is done. The probabilities of making a new high are very low. I would say 20, 25% based on this pattern. And that's why this is now pointing on the weekly chart to the downside. Look what happened on the momentum here. It went from positive to neutral to negative. The OBI has gone as neutral. There's a bunch of yellow dots right in here. So a very big deterioration in the Russell. The Russell, for the market to do well on positive breath, the Russell has to be in good shape, but Russell actually is in bad shape. So let's just look here at MDY really quickly, which is the mid caps. And you can see in here that the mid cap on the daily chart, beautiful cyclical pattern in there. This actually broke that low right over there. So what that says to me is that this cycle points down, and any rally in here is a failure. I show you that because I want you to see that what's going on in here is that there is a very severe breadth deterioration. The market is not going to be able to go up without the small caps and mid caps. You need to get solid breadth on the upside, and those are the ones that look the worst right now. So I really think that there's a strong message that we're seeing in there, and that this rally that I expect to occur into January, the only one that really looks like it has a chance based on the patterns at a new high is the NASDAQ, but that's really not, would have to be led by the mega caps, which I don't think they've got it in them to do it. So, with the market now up 100 points and the S&P 500, I would not be surprised if this is really all about the amount of the upside move is all about triple witching here today on Friday. So I want to bring in another chart right now that I think is very important to look at, and that is the HYG. It's interesting that we had somebody ask the question about the comparison of the stock market to high yield. And this, I think, is extremely important when you look at this. Now, I'm looking back here to 22, but I can go back further. And what you see in here is that on the bottom is the S&P 500, and the S&P 500 tracks the high yields very closely. So you had this little rally here in the S&P 500, the little rally here in high yields. And then the shape is almost the same. Look at right over here, the shape almost the same. And then here you can see the shape is not quite the same, though high yields were weaker. The S&P was stronger. And then the markets, again, the same shape, rally, sell-off, rally, sell-off. So the S&P 500 here as I just showed you, didn't get as low as that cyclical low right here. Look what happens here on the high yields. It has a breakdown. This is really bad. This is a very negative sign as it broke down right over there. It relates to what happened back over here where it broke down right there, where the stock market had a rally, and then as you see right over here, the rally right here, and then began to move down with the high yield bonds. And that is really a very, very negative signal when you look at that. This says to me, and that's why I have this downward path right over here, that this takes you out into May. Now, the next weekly cycle in the stock market really takes you out into June. This is something that I think is an important warning for the stock market. And being that these track so closely, and you have the breakdown right over here, just like you had right over here, and the stock market failure right there, yeah, you get some attempted moves to the upside in here, but this is a very negative message that I see right there. And I thought that was very important to bring to you to see that comparison. I look at that pretty regularly, but that's really something that I think really needs to be paying attention to. If the high yields can overcome that and then start to move above that last peak, well, then I'll be saying that was wrong. I mean, everything got to be okay after that. I have a hard time saying that to you with the stock market at historic valuations. And at a period right now where we have disruptors in government that are about to shake and are already shaking things up very significantly. Tariffs are going to be, at first inflationary, but then they're going to be very disinflationary. And there's a lot of reasons to believe that the markets are going to be in a very highly volatile period moving forward. So I wanted to show you that. I thought that was all really important information. I am going to show you the bias heat map in just a second. I think it's really important to look at that because it gives you some great information on all of our indicators. Before I do that, I want you to remember that this is the time for the Give the Gift. You can get these non-recurring 3-month memberships and get what I'm going to show you right now. You'll be able to have that on the TOS platform. And you can give the gift to yourself or someone that really loves technical analysis. Matt showed earlier in the show a lot of detail in this. All you have to do is go up, click the holiday specials on the front page, and you'll be able to get these non-recurring offers. And for level 2, we'll send you back a gift of a $20 gift card. Level 3, we're going to send you back a gift of a $50 gift card. And level 4, we'll send you back a gift of a $100 gift card. But the reason I went through that again is because this level 4 is where you're going to get the additional bonus content that I'm going to show you right now coming up. So let's take a look now as we look at the stock market and switch over to the bias heat map. This is the heat map right here, just overlaid on these charts, as you can see. And if you look over here, what I have here is the whole list of different country ETFs. And then our stock market here is right there on the bottom. The order that I put them in is a little different than what Matt did because I have this set up really for a longer term swing trade holding maybe for 1 to 5 weeks in that category. MCI right over there, and you could see the conditions right in here. OBI right there. And the only time you see it orange, then it's likely you're going to get a short-term reversal. This is ILF is now orange. See, it's red, so it's giving you a likelihood of a bounce that will fail is actually what that's saying. Brazil right over here, pretty much the same thing. And the key is, how do these line up in here? And the OBI is giving you a lot of neutral readings right in here. The only thing that's green right across that you can see right over there is still the QQQ. So I just showed you that the NASDAQ is the best chart, and this is picking that up very clearly. I'm going to bring over a little different version of this right now because I really want you to see the value in this. This is a look at the same type of a look, but instead what I'm looking at is the spider selects XLE, XLF, XLV, XLI. And these are in the top weighted, the top 10 weighted in each of those sectors. So I can get an amazing feel for what are the stronger and weaker sectors in here, the stronger and weaker stocks in each of the sectors. I'm just going to scroll down in here so you can get a really good idea right in here. And then I can sort also by clicking up at the top. So you can see in here XLC, XLP, XLY, XLU, all of those in the top 10 weighted stocks in each one. If you have a TOS platform, Thinkorswim, and you want to upload this and have it, you can just get some great information. And we'll help you with all of this. We'll help you set it all up based on what kind of a trader you are, and you'll really love having this. Let's look at the, now I have this set up based on this insensitivity. The MCI is the least sensitive, then the OBI, the AskSlim ribbon, and the reversal scout. So we had a reversal today in the market. Let's see which ones gave you an upside reversal. And you can see in here all of the ones right in here that gave you this short-term upside in the reversal scout as it turned up right over there, the slim ribbon turning up right over here in all but target there. So this is kind of the shortest term look right over there. And now when you look all the way across right over here at ACN, I'm sorry, at Broadcom, you can see it's orange right there, and that's telling you that this rebound in here is likely to fail soon in AVGO, in Broadcom, and give you some further pullbacks in there. Let's just sort on the OBI right there, and you can see all of the stocks that are negative on the OBI. Option bias indicator. That's stocks that you want to be on the downside and the negative side. These are all the orange colored ones that you can see right there. And when they're orange and you're all red across, that's telling you these are already overbought in negative conditions. I'm sorry, these are oversold in negative conditions and likely to give you a pretty good upside bounce in here when you look at that. So that's just a great way to scroll. And if you're interested in the market condition indicator, you can do that right in here and see which of these 110 stocks we're looking at are positive or negative. Remember that the MCI goes from positive 100 to negative 100. And you can see how many of these are in very seriously negative condition. And when you look at that, those are certainly not stocks you're going to want to buy. And then go back and click symbol and go back into the setup that we had before. So this is fantastic, as you can see, looking at the different groups. And I hope that as I scroll through these right now, you can get a good picture of that. And then you can look at this, slow it down, stop it, and take a look at each of these groups that are in here and the condition right now. So I wanted you to have a good look at this because you could actually put this up right on your own screen and do it any way that you want to. I'm going to go in here and select in the canned groups, the futures, so you can get an idea how this works on futures. It'll work on all of these groups that we have in here. And here it's going to load up all of the futures in there. And you can see coming down across here, all of the futures list. This is there's a lot in the list, so it's filling up. The black ones are taking a little time, but then you get a good picture in here on the condition in all of the futures. Imagine having this right at your fingertips. I mean, it really does a lot for putting our proprietary indicators right in your view to be able to use that. So I wanted to show that to you. I think it's really important. And again, the stock market right over here, looking at the SPY, the NASDAQ, and the IWM, you can see that it's giving some appearance of negative conditions, except for the NASDAQ, which is still strong. But look at these other countries, how negative they really look and how bad they are. And I don't know that they're going to be able to pick their heads up. Pretty negative. Just did analysis this morning on the EEM, emerging markets, and that's looking pretty bad. Again, here is the stock market SPY for one more look in there as we look at our multiple time frame analysis. And you can see that right there as we're potentially putting in a top here and looking at that daily chart. It really looks to me like it's going to have trouble moving forward. That is everything I'm going to show right now. Team, I think it's been a really interesting show. Tell me how you're feeling.
Feeling great. Yeah, very comprehensive analysis, covered a lot of ground here. Always fun to have our members share their requests for symbols and questions. So I think it was a great show.
Great show, guys. Thank you all so much.
Yeah, I think it was wonderful to see all those indicators. Very helpful.
Yeah, love it. I love being able to present it that way. So I hope everybody takes advantage of the specials we have going on now, and we'll see you soon.
All right. Happy holidays, everyone. Happy New Year
Bye.
coming up. All right.
Yeah.
Bye-bye.
Bye-bye.